Hello, bro. Today's a very quick one on the weekly analysis. We are on the weekly time frame of gold, and the momentum is obvious. We are on the bullish run. We have price breaking the previous high to the upside, indicating the strength in bullishness. And then obviously, for last 2 weeks, we did saw some kind of exhaustive move. However, it didn't hold for the just ended week. We have price coming in with this bullish candle to continue the bullish run. Yes, it means that we can actually, expect the bullish run to continue. Why? Because we can actually see the break in higher highs as price continue to move up. So obviously we can expect some kind of, a little bit retracement. Then maybe, yeah, just maybe to resume the trend. We are actually making anticipations or speculations. We are not making direct price action move. All right, fast forward on the daily time frame. This is where the story actually gets a little bit tricky. However, we still stick to the higher time frame trend and then try to, make meaningful or informed trading decisions. So we can see a little bit of choppy price movement for the previous 3 days. So we have Wednesday, Thursdays, and Fridays, actually not making any significant move either to the upside or to the downside. What I can make out from the daily time frame, regardless of the choppy movement, is that simple. I am looking at price sweeping liquidity right here, and with liquidity sweep we stick to the direction in which price reverses right after it sweep liquidity. So in our case, we have the sell side liquidity swept over here, and obviously we are looking at the bullish trend to resume, which kind of complement or add up to the bullish trend that we did saw on the higher time frame. And adding a little bit on liquidity, we are in a low liquidity move right here. Why low liquidity move? We have the only point of liquidity here, then of course we have some liquidity throws over here. So following the concept of liquidity calculation, like I said, low liquidity move, it means that price is actually leaving this liquidity behind, which will be hunted in the nearest future. But of course, price will actually target any form of liquidity to the opposite side of the low liquidity. On the 4-hour time frame, very interesting price action. Before the week start, we were actually looking at price sitting on top of the trend line and within the demand zone right here. So we were actually speculating or anticipating a corrective move to the upside to balance the inefficiency here. Then we can resume or continue the bearish move, targeting this liquidity here or the throws of liquidity down here. But that never happened, which is perfectly fine. We are not always right on the forex market. That is why we mostly have stop loss to protect our account. But guess what happened? Right into Monday, I saw this bullish FU candle here, then everything changed for me. That was when I knew price is not going to target this liquidity. Price is okay with any form of liquidity that is below the FU candle. Now, FU candles, I've spoke about it in 2-3 of my videos. Kindly watch to get the concept. One, it shows direction. Two, we use it for entry. So with the FU candle, yes, price is okay with any form of liquidity below the candle, then it points to the bullish side. So this move, the bearish move here actually happened overnight. We couldn't get any entries within the lower move here. I was looking at price action within this range. Now, before this bullish 4-hour candle came, I was already in the trade. I got my entry somewhere right here. Then the bullish move came. Obviously, I was targeting this high. Why? Because it is a resistance zone, and most of the retail traders will be looking for a reversal within the zone. Yes, we did have price or market makers giving them the reaction. As you can see, a little bit of down movement, but eventually price continue to the bullish side. I did got second entry when I saw this was a double bottom liquidity. Of course, this candle actually swept the low, which is an advanced FU candle. If you did followed my video very well, then you will know that this was an FU candle. We were looking for the retest. We had a retest with a bullish candle, then the bullish move resumed. So I got an entry within here, then I was actually targeting the same place. Now the third entry within the week was with this bearish FU candle. After the liquidity sweep, there was only one thing happening in my mind: either for us to continue the bearish move, or we can still push higher. But eventually, like I said, the FU candle came, then I got the entry right at the retest. These are powerful candles. Just learn about them and you'll be very fine on the forex market. So the retest of the FU candle, the push came, and now we have price retesting a bullish FU candle. What does it tell us? We obviously know price is bullish on the higher time frame, monthly, daily, weekly. Then if we have price retesting a bullish FU candle on the 4-hour time frame, then we know price will continue the bullish run. However, if price goes below the low of the FU candle, then our decisions have to change. Why? Because we have this resistance zone, we have the rally base, rally demand zone, not the perfect type, but if price actually breaks the low of the FU candle, like I said, we would expect some kind of reaction within the demand zone to resume the trend. So all in all, we are looking at a bullish market on the gold time frame, but you have to be dynamic. Like I said, last week we did so, and we were actually looking at a bearish move, but price actually gave us a bullish move. So that is perfectly fine. Always stay dynamic and then flow with your knowledge. Apply everything you see, and you will be fine on the forex market. See you in the next video.